Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. I started a little bit early there, and we're still trying to fix the light. Well, I can get that one on. Oh, it's because the switch was off. Wait, let's get some music going here. Oh my gosh, the kids the other day, they wanted to listen to Wicked on the TV, and they used my Spotify account. If my Spotify starts suggesting to me musical stuff, I'm gonna flip. All right. So, let's see what happened over the weekend. Can we get, oh. No sound? For real? My microphone is saying that there is sound coming through. Or are we going to come over to here? If you're really getting no sound, that means we are hosed. Test. Ray says I have sound. Okay. I was you know what? I was having some issues yesterday where like I put my headphones on and I couldn't hear anything. And I was like, what the heck? And I kind of fiddled around with it, and then like I touched the box, and as soon as I touched the box, I could hear. So I'm like a little bit weary, like, oh, I'm gonna have to replace my audio interface. That would be terrible. Okay. To the volume profile. Okay, well, the 10-year Treasuries, it looks like, you know, they had a decent enough rise on Friday. Kinda, well, like we had that rise, but then later on in the day, it continued on up. So we busted that weekly high. We're doing pretty okay here. The overnight session. There was a move here before the open. I'm really not sure what that was about. So we're going to be doing a little bit of searching around to see what that is. S&P 500 did not go so well on Friday, so it kind of looks like that the move up in the Treasuries was maybe because of the risk-off move in the Treasuries, but there didn't really seem to be like a super clear news catalyst, and still seeing commentary that suggests that it's degrossing. Oil down the bottom of its range. Gold and silver looking very nice. Gold at least. Silver kind of copper. So, okay. Like, listen, that's not terrible, but there's a little bit on a downtrend, right? And the Japanese yen has been looking good. Really, I feel like that the Treasuries should be doing better given how the Japanese yen has been, but that's okay. In the Bitcoin, well, on Friday, they had got back to that 10,000, but it looks like somebody took exit on that. So that's where we're at. ZB will be 120. What? You think that ZB is going to go up 5 points? Okay. For ZB to go up 5 points, that's a little bit higher of a time frame than we usually work with here. Taihan. But you're looking at ZB, so that's good. By April? 5 points in 2 months. That's still a little cray-cray. I mean, for that to happen, you would basically have to be like full out panic. We're in a recession sort of behavior, yeah? When were we last at 120? Oh, I have to go back years. When the 10-year drops to 3.9. Ooh, last time we were at 120. Maybe the last spring in 2020, they were kind of just below that. That would be a pretty, that's a pretty big call, my friend. Good morning, Uzi. By the way, I need to, oh, I do have one. That's interesting. I need to change this. And we need to enable our strategy. All right, cool. Looks good. I think we fixed the bugs in the strategy at least. Let's give it a week. I think the next step is to try and do some more advanced order placement. Have it use limit orders and stuff. What is the most realistic profit one can make monthly by just day trading the right way? So, man. I mean, there's a couple of different ways to look at that, right? Because you could sit down and you could say, well, if you're a really good trader, I mean, like the reality is that like only like 5% of futures traders are profitable in the long term, and probably half of those don't make it over the very, very long term. If you were one of those people, what could you realistically make a month? It depends on the size of your account, but I do think that you could make $10,000 a month with a large enough account. The issue that you kind of run into is that everybody is trading too big, essentially. Like the way that the combines are set up, basically force you to trade too large. So, you know, like if you had $1 million portfolio and you were making 10% per year, that would be pretty good. And, you know, that'd be $100,000 a year, right? But I think that maybe there's a better way that I could attack this, right? The reason you're probably asking that question is because you want to day trade for a living. And so you're trying to see how realistic it is for your income to be based purely off of day trading. Just forget that dream. It's not a very good dream. I mean, like, trading is cool. I love trading, but the chances of you achieving that are practically none. And if the only reason that you're doing it is to make money, there are so many other things that you could put the same amount of effort into and make more from. Right? Like if your whole thing is, I want to make money, go start a small business. Really the best return, the best, most reliable turn that you're going to get is starting a small business. If you do the small business right. I mean, like if you go and you start a restaurant, then you're probably going to fail, right? But if you really do your research, you really know what you're doing. It's hard. Probably have a better chance than starting a small business. Oh, and you have to have a good idea too. That's the real problem, right? On the split side, if you just really love trading and you just want to be involved in the market one way or another, then it doesn't really matter how much you make, right? As long as you're covering your expenses, which is basically what I do. Thanks. You're welcome. Probably lost a viewer right there. Probably, oh, okay, cool. I don't need to watch this guy anymore. I'm not going to do trading. But I probably saved him a lot of grief. Yep, take it as a side hobby and not for a living. Exactly. And even then, as a side hobby, it's really more of a side hobby for people that, you know, you already have too much money. You know, like if you are a tech worker, I think that people that are working in tech and they're making a really good salary in tech, maybe that's just because that's me. But that's probably like the ideal person for day trading. You want to already have some extra income coming in and like everything else is already taken care of. So what I find a lot of people that they want to day trade, there are people that like, they don't really have any kind of career to speak of. That's why they want to go into trading, is because it seems like that's something that they can go into that has the possibility of making a lot of money, that they don't need to have the credentials, like you don't have to have gone to school or have a good resume, or, you know, you can just do it. I think that's one of the things that attracts a lot of people to day trading. But the unfortunate reality is that if that's you, you're probably unlikely to have success with day trading anyways, because the market is extremely technically efficient. So you really have to put a lot of time and effort and learning into it to really even be able to tread water. But, you know, like some people, their thing is knowing everything about the Lord of the Rings, right? Like they're just obsessed with the Lord of the Rings. And usually those people are maybe a little bit autistic, but not always. I don't think that Colbert, he's one of those guys. I don't think that he's autistic. Okay. But he knows a ton of things about Lord of the Rings, right? Well, some people, their thing is the markets. Markets can fill that hole. There's always something going on in the markets, always something to know. It's actually a great hobby. He asks, did you ski? I did. You know what, man? I feel like that there's got to be something wrong with the way I'm skiing or my gear, because I do 3 or 4 runs and I am just so done. I'm just so done with snowboarding. I don't know why, you know, like my quads or my feet and my foot too. So the fact that my foot hurts makes me think that the stance is bad. I think that the stance is too wide. But then if I bring the stance in, the board is too unstable. So like they probably have me in the wrong size board. Here's kind of what I think. But yeah. I want to do, you know, I was kind of looking forward to like, oh, so they have like demo days, don't they? I want to try that. Maybe find a better board and then buy a board. But like, first of all, like, do I have a job to buy a board anyways? And then like the demo day at my resort is actually next weekend. And I don't know if the vendors that they have would really be the ones that I would want to buy from. So like, maybe I'm not going to do that. I hate the amount of gurus and influencers selling the fake dream of day trading, because these people make a ton of money just scamming kids. Yeah. Well, you know, I don't ever, maybe this is just because I'm a content creator. I don't ever want to discourage people from making content and from making good content and from making money on good content. But I am going to bash on people that are giving people unrealistic expectations about what they're going to get from day trading. Yeah, because pretty much everybody on YouTube that's pushing this, that you're going to see in your feed, the reason that they are getting pushed in the feed is because they're putting all of these big thumbnails on that are like, I made $1,000 today. And people think, oh, okay, I can do that too. And then they watch it and they're not able to duplicate that success, right? So it's a terrible thing. So what really needs to happen is we just need better influencers. Like, honestly, in all seriousness, I'm gonna kind of celebrate myself and then bash myself here, right? I really think that I'm creating the best content on YouTube about this subject. I think that most of the stuff that you see on YouTube is trash. I'm really the only person that's giving you like hard empirical data and really helping you understand the things that are necessary to really understand the market at a deep level. There are maybe some other YouTube videos out there that are like, you know, a college lecture, but in terms of like a creator making like full produced videos teaching you this information, I'm the only one. So I really think that I'm creating the best content on this subject. But the reality is that there is really nothing that qualifies me to be that person at all. I just kind of fell into it and happen to be the only person that's caught on and is giving you that stuff. And probably a large part of the reason why you don't see other influencers doing it is because it's not so flashy. Like once you really understand the market, you kind of realize that the whole dream of making a living from day trading is probably ill-fated. That's kind of what the data says. So those guys, they're not going to be interested in that, right? But there are all sorts of guys in the industry and in the academic world that have been teaching and talking about this stuff for decades, and they're just not on YouTube. And, you know, I'm trying to get them there. I'm trying to set up interviews and things like that to try and elevate the names of these people. Because, you know, it's like it's not imposter syndrome. It's just I know where I'm at relative to everything else, and I know what kind of content is out there, and I'm the only one providing this kind of content, even though I know that there are people much more qualified. Seeing all the influence. Yeah. Oh, hold on. What? Kids were in the room and things are a little bit janky here. Got to get everything. There was a Reddit thread of this girl. She was like, oh, my boyfriend, he really thinks that he's going to make a living from day trading. And he says that he's following ICT and that he's like he's totally legit. And so he's going to make money from it too. And all I said is your boyfriend's learning garbage. Hold on a second. I gotta keep talking. I gotta take a few more mouthfuls of this oatmeal. Didn't have enough. None of the dishes were washed, so I had to wash some dishes before breakfast, and so that kind of put me behind. I wasn't able to eat everything like normally. So I forgot, but because Dee said, well, we've had like a pretty reasonably change down in cumulative delta. It's true. Like they've been selling it overnight. I don't know what it was with this bump that took us up to 19 and then we came back down. I'm not able to find any kind of a news event that corresponds to that. But the only major flows that I think we're going to see this week are going to be rollovers and end of month, right? So I think that you might find the market to be pretty tight until we get to like the end of the week. And then, well, I don't know what you'll see on there. You might see the bonds sell a little bit and have some of that money reallocated to stocks, but I haven't really seen any models on what what they think it's going to be this month, what those flows are going to be. Strangely enough, over the past 10 minutes or so, slight imbalance to the long side. Still a little bit too early to make any conclusions. If maybe I was really strongly expecting a long flow, that would maybe be enough to get me in, but not on its own. There we go. Captain Crunch says Monday moves slow. Oh, like that's true, but that's kind of why I'm a little bit interested in what's going on here, because it is much more active than I would expect it to be, given the circumstances. So last week, there was some days that were really, really slow, right? And we don't really have a whole lot going on this week except for end of month flows. So I would expect it to be a slow month overall. But the range and the change in cumulative delta that we're getting is slightly higher than a typical Monday, let alone a Monday that I would expect to be so tight. So I do kind of suspect that there is something going on here today, but I'm just really not getting any kind of clues here as to what it could be. There was a move here in the Treasuries that kind of looked like could be news, and it's not. Doesn't seem to be anything there. Apple goes mega. $500 billion investment plan in America. 20,000 new jobs. Ooh. That's Apple's going to hire more people in the U.S. Illegal aliens loot U.S. trains in Mojave Desert for high-value Nike sneakers. That sounds like Stardew Valley. Are you sure that wasn't just something you saw in Stardew Valley, Hero Hedge? Goldman traders hit the panic button. Perfect sell storm of positioning, valuation, breadth, concentration, and policy. I'm a little bit concerned about the stock market in the short term. Yeah. Like this move down that we saw last week has me a little bit on edge. For sure. But I'm not seeing like panic in the Treasuries yet, so it's not. We're not to the end of the world yet. I feel like the death of woke in the private sector is anticipatory. As in, they need to find savings, and that's like the easiest place to go first. Maybe. Cutting bureaucratic bloat to maintain margins in an economic contraction. Yeah. I mean, it is a good question because one does kind of have to wonder why now. Is it really just because the administration changed? Because I kind of feel like that when the Supreme Court ruled on the thing on the universities, like the racial quotas in universities, that should have been when I think that really should have started to fall apart, or when we started to get all of these reports that people were being forced to attend like white rage sessions and things like that, you know, like CD helps a lot. Yeah, it does. I mean, that's probably like all of the indicators. That's probably the indicator that I rely on the most. That and the spreads in the dollar index. And then the inventory cost basis. I don't think it's the administration change, since the resistance was strong in 2016-2020 among the private sector while money was still cheap. Maybe. Well, the thing that puzzles me about it though is that I am seeing, or at least the companies are seeming to voice like a genuine change, like a change of heart, change of opinion, sort of a thing. Okay, like, and so one of the things that's kind of irks me is there was like on Reddit, of course, the which is basically owned by the far left at this point. Man, there was this thread the other day where people were talking about Reddit's stock having dropped 20% last week, and talking about how, like it's just like only the left now on the website. And I kind of pointed out the whole thing that like you could be like 45% of people like your comment and 55% of people downvote your comment, and you're going to be down at the bottom of the pile and your comment's going to be hidden. And basically what that results in is 45% of users not feeling welcome on the website. And I got all these replies to it that are like, you guys have Facebook and Twitter, let us just have this. Like, it really is like the left is trying to suppress everybody else on the website so that it's only them on Reddit. Okay. But anyways, these guys were trying to push back on it, and they were all saying like, okay, but DEI is actually like equality of opportunity. Like, what are they doing in DEI that's so bad? Well, I'll tell you exactly. They were requiring that the board of directors had a certain gender and racial quotas. That you were more likely to get investments if you had a female on your board, if you had a black guy on your board. That's inappropriate. Especially for the board of directors, it should be the people that are the most qualified and knowledgeable on the subjects that are facing the company, right? And that's where I'm seeing companies start to say, hey, like Goldman, they were doing that. And Goldman was like, we're not going to do that anymore. We think that's inappropriate. It's really curious. It's like, why now? Because if it was just like, cheap down for a recession or whatever, why would you go all into it like that, right? Because that's not it. When interest rates go back down, I don't think that stuff's coming back. Does your cumulative delta load history by I thought that it does, but I might not have the defaults set correctly. Let's test that, shall we? If I come in here and I go to indicators and I go to my cumulative delta, and you might not even have the most recent version either, by the way, Uzi. What you would want to have is load cache data ticked, save cached data ticked, and save tick replay. So if you apply it to a chart and it only starts on the current bar, that should only happen if save tick replay is unchecked. Vic is a bug. What was? Oh yeah, that was the bug. So there is another issue, which is that if you have the indicator on, okay, with all three ticked, it only and you also have tick replay enabled on the chart. Oh, Uzi says, oh no, hang on. Okay, so now you might get a different issue. So there's a bug that we're aware of, which is that if you have it set up with certain settings and it caches all of those settings, and then you want to change the settings, it will still try and pull up the old cached data, and so like nothing changes. I don't know if that's going to apply to you on this situation though. Because he says, there it goes. Okay, cool. Yeah, if you have load cat, save tick replay turned off, then what you'll get is like, here's when it was live, and then the tick replay, and then here's when it was live. Should get something like that. And during this period, you go and you look in the cache data, there won't be anything in there. Versus if you have it turned on, you will get all of it, but in the cache data, you'll see in the was recorded live zeros in here. So you can differentiate. So how would you make it numerical? You mean like you want just the cumulative delta change for every bar? Because you can do that, but then that comes back to like, okay, now he says he'll send a picture. Let's compare Lloyd Austin to Pete Hesketh. Who do you think is more qualified? I don't know. I think that Pete Hesketh is pretty qualified for it. I mean, there was no question that he was going to be the guy that they asked to do it, right? He was in the previous administration and Trump liked him. Yeah, you're talking about having a net number at the bottom of every bar. But that comes back to, well, NinjaTrader does that. If you have volumetric bars, that NinjaTrader will put those at the bottom. Because I could add that. It wouldn't take a ton. I don't know. Right now, I don't feel like is the best time to... Oh, you don't have the paid NinjaTrader. Okay. Well... After many... for some reason, I thought that you had it. So are you using... Is that Gomi that you're using? The question isn't... Well, I mean, I don't know. I've never heard of the other guy, I don't think. Lloyd Austin? I'm not sure who that is. Why does it matter to you? Kind of seems like an out of nowhere. Oh, I know who Lloyd... Okay. So wait, I don't think you were... Yeah. I thought that you were saying who is more qualified for the position of border czar or whatever it is that Pete Hesketh is doing. Is that, or do I have people mixed around? Hegseth? Oh no, he's the Secretary of Defense. He is. Yeah, okay. Who? Okay, that's a different story. I getcha. So I don't really know a whole lot about the background of Lloyd Austin, to be honest with you. I do know that he was kind of one of the guys in the military that were pushing more outright liberal agendas, and so that's why he's gone. So we would just start there, right? The reason Lloyd Austin is gone is because he was too political. He was too left in his position, right? I'm not sure if it was because he's considered a DEI hire. Did Donald Trump say something that Lloyd Austin was a DEI hire? Because I hadn't seen anybody insinuate that. Only that Lloyd Austin was one of the people that was kind of pushing woke programming and climate change in the military. So I think that that's why he was why he was fired, essentially, right? Pete Hegseth is a different thing because he's not an existing general or anything like that. So there was some real question about whether or not he was qualified, right? But qualified here is kind of, what would be the word they say? Like, it's that qualified is not a very objective measure. You know what I mean? What makes somebody qualified in one person's mind is different from what makes someone qualified in another person's mind. In this particular instance, Pete Hegseth is not, like, he's not a general. Like, he understands things about the military. I mean, he should be able to do the job. But I think that Donald Trump is picking him more because Pete has some strong opinions about how the military should be run that Trump likes. And so he has the ideas, and that's what makes him qualified, right? This is what kind of gets into the funny thing where, most of the time, I feel like that both the right and the left are wrong. I think that it's wrong to put somebody in a position because they checked some demographic box. Okay, that doesn't help them. That's a negative thing for society and for the individuals involved. But this idea that we can be a pure meritocracy is also silly. A pure meritocracy would be a dystopia. I think if I ever became a writer, maybe that would be one thing that I would write, is to try and write a story about a society that had achieved pure meritocracy. And you'd see how big of a nightmare that actually would be. That's not the way that humans are built. Humans are built to, to work together and to try and strengthen the whole tribe. And we're built to be able to deal with the fact that people have different abilities. And we still find a way for everybody to contribute. And that's kind of one of the marks of being a good leader. I think something like a really big red flag to me in a leader is they complain about the people that they've got, right? You get part of being a team, part of what makes a team is that you don't get to completely choose the team, right? It's only at the Olympics that you get to do that, right? Build a super team based on the people that you have in your country. But even then, you don't completely get to choose them, because maybe you would love to have Ovechkin, right, on your hockey team. The guy that gets a hat trick every game. He's Russian, isn't he? I think he's Russian. He wasn't in the Four Nations playoffs, so that must mean that he's Russian. Austin probably would have been on the way out anyways. Man had health issues and stuff. Retirement was probably in the cards. So anyways, I the idea that it can be perfect meritocracy. Okay, let me start over. The idea that we should have a meritocracy is actually just deployed to control you, and so that rich people can get away with more shit. This is like radically left-leaning sort of thing for Seth to be saying, but I really think it's the truth. This whole thing that's like at Facebook, oh, we're going to lay off the underperformers, that's total bullshit. These companies do not have good enough metrics to really understand who are the top performers and who are the worst performers. Like, the whole thing is that you go into those yearly reviews, and you go and you give everybody on your team, performed above expectations. They'll say, no, you're not allowed to do that. Right? Like, you can't judge people the way that people want to, because then that would mean that everybody would have to get raises. So, like, what's with that? But then they can use it to turn around and lay people off, right? And what I've found is that really what that means is, because most people, they're going to go in and they're just going to give everybody threes. But then there's that one guy where you have an agenda against them. Maybe they're neurodivergent. Maybe you don't like their opinions, whatever it is. People find an excuse, and then that's the one that they give a 2, right? So does that really mean that they were underperforming? No, not really. It just means that they weren't good at playing the office politics game, right? But what that allows Facebook to do is to come in and say, yeah, well, we fired people, but that's good because those were people that weren't really contributing anything anymore, and now we don't have to pay them. And so then the investors can go and say, oh, this is good. This saves us money, and it's not going to hurt our company in the long term whatsoever, right? Which is not true. Everything, all the metrics that we have is that there is like some real negative long-term costs to these sorts of things. So yeah, I really think that the whole idea of meritocracy is really just kind of a scam that allows corporations to get away with treating people like shit. Companies don't need a significant portion of the people they've onboarded in the last 10 years, especially with taking AI into consideration. Well, so I think that it's always going to be the case that as a company, when you're growing, there's going to be a lot of people onboarded that aren't contributing. I don't know if you're going to be able to do a very good job of identifying who those people are, but it's just kind of something that is generally going to be true when you get to large enough numbers, right? Some people are going to contribute a lot more, and we find that it's like a very small portion of people that contribute the most, right? And that's something that you, as a company, you kind of have to accept to grow, right? You have to pull on as many people as you can and hope that the strategies and stuff that you're using to onboard people results in you acquiring the best people that you can, right? But I do not buy the idea that we don't need as many people as we do because of AI. So Microsoft's CEO said a comment about this over the weekend. He basically straight up said that AI has yet to actually produce any value. And I think he's probably correct. Like, I think that there are, some edge cases where like AI is useful, but like that's really just the situations where like I was looking things up on Stack Overflow before. Okay, so now I can do that sort of stuff for any kind of report that I'm going to make. Does that really make those people that much more efficient? I just don't buy it, to be honest with you. And what I see happening right now is tech companies in particular, they shed a lot of jobs. Like the big tech companies, they laid a ton of people off back in 2022, and they've been slow to hire them back because they are hoping that AI is going to create those productivity increases. But so far, those productivity increases have yet to materialize. And probably what's going to happen is eventually you are going to get back to a point where those companies want to grow, and they're all going to see themselves behind the curve again. And they will it will be like a mad dash for talent again. Right? Like you have a market where there's like, here are the number of people available, and here is the a number of jobs that are wanted. And we had like this huge spike in COVID, and then we had high interest rates, and so they cut them down like this. But really the longer run is probably like this, and where the demand actually probably continues to outpace the supply, right? So we're right here. It's starting to come back up, right? You look at a year from now, it'll probably be right here. And then all of a sudden it turns into, yeah, we have tons of openings. Like, that's what I think is going to happen. They're talking about a class of what? Who is this class of people that don't really produce anything? We're talking tech workers? I don't know. Machines can hold meetings for eternity. They can send infinite emails. They can send messages. But like I said, it's not turning out that way yet. yet being the operative word, but I mean, it's been 2 years. Like, so I don't think that time necessarily fixes the two major issues that are preventing AI from actually producing value right now. No, because you're talking about the difference. Okay, so like the 2 years after the invention of the combustion engine, there weren't 40 million cars on the road. But to fix the kind of problems that are preventing AI from being valuable would be like the equivalent of you need to have a car that can fly in time travel. Okay, like there's like two major innovations that you have to overcome. It's not just a matter of making an engine that's efficient enough for everybody to use it. You think so? So if you did what I did, then you would understand why it's so ridiculous. Let me put it this way. AI will replace Mark Zuckerberg sooner than it replaces me. Let me explain why. So what does Mark Zuckerberg do? His whole thing is understand everything that's going on in the company and set the strategic direction of the company, right? Well, that's something that AI is actually really good at, right? AI is really good at seeing all of the context of a situation and making sure that all the boxes are checked. That's why it's really good for, like, you know, testing arguments with, for instance, because it will pull so much stuff out that you didn't necessarily think about, right? So that part the AI can replace. So then you don't actually need a CEO. What you need is like a director of innovation, right? Because the machine can't necessarily come up with something new, right? We want to see the future, like this is the place that we should go. Like, you know, of course, Mark Zuckerberg's visions haven't necessarily been very good, but this kind of vision that's like, we're going to own the metaverse or whatever, you know, that's the sort of thing that I don't think that an AI is going to come up with, right? Okay, cool. So Mark Zuckerberg becomes chief of innovation instead of CEO. That's probably going to happen, in my opinion. Okay, versus an engineer, and in particular a site reliability engineer. What's the difference? Well, when you're talking about software engineering, the computer follows the instructions that are given exactly. So any kind of individual mistake, you know, if you don't have a semicolon in the right place, it doesn't even build, right? And then you have to have all of the logic of the thing correct. And the problem with LLMs is that they make shit up. They hallucinate things. They all do it, and they all do it to a greater extent than you might realize. And so if you really want to see it, like how this works, go and pay to be in OpenAI's, like, you know, the $200 a month or whatever, and get into the the agents thing, you know, and then tell it to go and, you know, update the spreadsheet like this or whatever, and see how far it gets, right? And what you'll see is it will make a mistake. It might seem like a kind of a trivial, non-important mistake, but it will make a mistake. And then each step along the way, it makes more and more mistakes, and they just all kind of compound on top of each other until the whole thing falls apart, right? And that is technology. Like, the amount of accuracy that you have to have is pretty high just for the thing to even run. And then what do you do when things go wrong, right? Because that's what my job is. My job is the humans, that they went and they did all of the work and the checking that they knew that they could do, and it still resulted in a problem. How are the robots going to deal with that, right? Because you're talking about a problem that, you know, all of the developers, they had those LLMs and all of these other things to check for it, right? And it's still broke. It's not, right? You're not going to replace that. If anything, you're going to need more of those people. Software engineers and say, well, what was your comment just before that? I was reading an article where Elon's new truck is more combustible than the Ford Pinto. Well, if there's a fire, yeah, because it's lithium. Type of machine you'd need to replace human construction with would be so staggeringly expensive and delicate it will never. No, I don't think that's true either, though. Have you seen? We were talking about this the other day, but I didn't show it to you guys. Let me show you. Maybe history. I don't know if I watched it on my other account. Probably. Yeah. I'd have to come over here and switch accounts, which I think should be fine.
Order filled.
Oh, okay. It went long. I can't find it. Can I scroll past it? I thought it was on Friday that I watched it. No. Was it this? Yep, it's this right here. Oh, wow. Hold on. I forgot. I have the speaker on. I'll fix that. Okay.
How far are we from robots that can understand and execute tasks just by listening to us?
Okay,
Much.
I'd like to try something new. Even though this is the very first time that you've ever seen these items,
You've seen this?
Use your new Helix AI.
Okay, so you've seen that. You don't think that a machine will be able to build a house in 10 years? It's coming, man. It's coming.
Billion parameters that processes both speech and visual data.
They basically,
hertz, acting as the
they
robot's
basically, they have,
brain.
the AI is almost
80
there.
million parameter
The AI is
artificial
almost
intelligence
there.
that translates these
And
instructions into precise motor movements.
So I'll give you an example, like these Boston Dynamics. You've
Helix
seen all that
controls
stuff, right?
35
Like the
degrees
dog
of
thing,
freedom in
right?
real time,
You know,
allowing
that's
for intricate
millions of
motions from
dollars in there,
individual
right?
finger
Not cost
movements
effective at
to
all,
full
right?
body
But
coordination.
now you can just go and
Figure
buy
has
one for a couple
demonstrated
$100 bucks.
Helix's potential in
Like,
various real-world
that-
scenarios.
And of course, it's
One
not quite as
remarkable
nice as the Boston
Two
Dynamics
robots
one,
work
but
together in a kitchen,
it gets the
organizing
job
food
done.
inside a
Yeah.
refrigerator
The
without any prior
within 10
exposure
years, I
to
think
those
that
specific items.
it will be to the point where the
system
robot will be
only
cheaper than a
required
person.
500 hours of training data, which is significantly less than other similar artificial intelligence projects. Since the entire system runs on embedded.
Now, you're talking about like managerial bloat, but this is a more complicated thing, right? Because, like, there's this idea that there's a lot of people that they get paid a lot to be managers and they're not really doing anything. Well, probably there are, but that's because they're just bad at their job, right? Not all managers are going to be good at their job. And kind of the issue is it's actually really hard to be a good manager, right? Most managers aren't good. I've been through that because I've had really, really good managers through my career. I really think that I kind of have seen some of the key things that you need that if I was going to go into that field, a little bit more reading and stuff that I could do. I stand a better chance at being successful with that just because of, the knowledge that I've been exposed to. But, a lot of them aren't effective. And then there's this whole thing that's like, okay, so you get rid of those guys, right? Into having a more flat organization. That's not necessarily better. Like, that's not necessarily better. The issue is that that's not like the way that people are meant to be. Like, you don't want a situation where you have one manager is kind of like dealing with 1,000 people, right? Like an organization that flat. That's not the way that it works. Teams start to become less effective, once you get past a few dozen people. Like if you go into tech and you find yourself in a stand-up with 20 people, like, start looking for another job. Eventually they're going to start firing people. Right, but again, there are things that the AI cannot do. Right? So what are the things that the AI cannot do? The AI is not accurate. It's not highly accurate. The AI is not innovative. Okay. And can the AI manage people? I don't, that's kind of like the last one that I really don't think any amount of innovation can actually fix, which is that they're not actually people. Do you really want your boss to be? I mean, come on, think about the nightmare you're going to create here, where like you replace all of the AIs with managers, or sorry, all your you replace all of your managers with AIs. So now you're gonna talk to, you're gonna have a conversation with ChatGPT about your performance and cadence of development over the past week. Come on. Nobody's going to put up with that. It's a Peter principle. Employees get promoted on the performance of their current position, but a lot of those people get promoted beyond their capacity. Oh, I think it's way worse than that, man. I think that so like there is an inefficiency in the market overall that we all kind of like, we all see. And we refuse to accept the severity of the problem and like the larger consequences. This comes back to this whole thing that like we want to believe that the market is perfectly efficient. And so we kind of bury our heads in the sands. But the reality is that the people that tend to climb the corporate ladder are the people that are taking the biggest risks and are the best at promoting themselves. And so that means that you get a lot of people in the managerial space that are a little bit more narcissistic, that are a little, right? And not necessarily are there because they actually have the good leadership qualities. Yeah. Cost effectively producing machines that outthink people like you no, it's not. So again, I think you're misunderstanding how the AIs actually work. LLMs do not think in the traditional sense of thinking. They are gathering up on things that other people have written, and they're utilizing reinforcement learning that has been given to them, and that's how they're deciding what to do. Let me show you. Let's see. Maybe Grok. Maybe Grok will be able to answer this question. How many eyes are in Mississippi? I'm gonna put it in quotes to help it. So we got what? 1, 2, 3, 4, 5, 6. I put 6 in there, but I misspelled the word too. Oh, it did it. It got 6. That's interesting, but is Mississippi a real word? The question's clear though, so I'll stick to counting. Now I'm wondering if the question means capital I or lowercase I. It says eyes, but the word has all lowercase letters. Still based on the count, there are 6 eyes in Mississippi. Let's make sure we stick to what's given. I'm considering if Mississippi might typo for Mississippi, but the question's specific, so I'll focus. See, if I hadn't put it in quotes, it might have done it the other way. Okay, so let me ask you a question. Look at that. Wait, what does the final answer that it actually gave me? It seems likely that there are 6 eyes in the word Mississippi. Do you see what I'm saying though? Like, you would just count them and tell me. When you start to ask the AI to follow actual logic, it runs into problems. Because it's basically, it has to rely entirely on its reinforcement learning that you've given it. Yeah, but okay, you keep talking about how they work. Yes, but again, that's what I'm saying, is that in order to fix this problem, that's a quantum leap. That the difference between that is the difference between a combustion engine and a car that flies. Right? It's a completely different innovation, right? That's like saying in 1930 that next year we're going to have cars that fly, right? It's ridiculous. You don't know how long it's going to take because there are discoveries that have to be made that we haven't made yet, and you have absolutely no way to know how long it will take to make those discoveries. Hence, we all thought that in 2020 we would be flying cars, and we're not. You know what I mean? And the issue is that you kind of have like 2 major innovations that you kind of have to overcome. One is that the LLM has to be able to process actual logic. We have flying cars, there, helicopters. No, but I'm talking like in Back to the Future, we thought that everybody be in flying cars, right? I don't know if helicopters existed in 1982, right? I went demo trading today in NinjaTrader, but when I try and place an order, it says the liquidation only contract is about to be expired. Please contact the trade desk. What's that mean? Okay, so what that means is that you are trying to trade a contract that is rolling over, And so they will only allow you to liquidate positions, not to enter new positions. So what that means is that you haven't rolled your instrument over yet. Usually there's a window that will pop up at the beginning that will ask you to roll the instrument over. But which instrument is it? Basically, like if this was in ZN rolls over quarterly, so it will start giving you that message. If you tried to trade 0325 on Friday, it will tell you can't do that. You have to trade 0625. You have to trade the next quarter. Someone short the treasuries, so it'll violently. How long have we been in this? We changed our thing to hold it for an hour, right? So we'll see. We'll see where we're at. I think that we still got 15 minutes before it exits. Okay, when the movie Back to the Future was made, helicopters were still a thing, right? But what the Back to the Future depicted was cars that literally flew and hovered, not just cars that had helicopters or anything like that, right? They predicted flying cars. And it people legitimately thought that was a realistic prediction of the future, and it didn't happen. And why is that? Why don't we have flying cars like that? Well, because there's still several innovations that you would need to make in order to make a flying car like the car in Back to the Future. That who knows how long it will take for us to get them. It perhaps a device like that is not practical at all, right? Maybe because assuming we'd have them is a stupid assumption to begin with. Well, maybe assuming that AI is going to be able to completely do all of the things that you think that it's going to do is a stupid assumption to begin with. How do you know? You really aren't going to know until it's actually been done, right? And why is that? Because there's an inherent limitation in trying to predict the extent of a technology that hasn't been done yet. Right? And that's the difference. You think that AI doing these things is just a matter of taking the current technology that we have and making it efficient enough. But I'm saying no, there's a more fundamental problem that will require a new technology, a new innovation to get it there. You need to add another layer on top of the LLM that is able to deal with logic processing. That does actual real logic. And the other big limitation is the memory. So they've increased the memory, but you don't have LLMs that it can remember everything that's happened in the company over the past 10 years and all of the experiences that it's had. It doesn't do that, right? So that's the other major limitation of the LLMs. And then I guess you could say of the things that I brought up, the third major limitation of the LLMs is that it's not actually a real person. So I don't think that people are going to put up with being managed by an AI, for instance. Right? Are you going to take orders from an AI? Doubt it. Doubt it. If we got planes crashing into things now, can you imagine the carnage if the same volume of people were flying around in their person? I don't know. I do think at some point you might actually get it, though. Probably not the way that it was depicted in Back to the Future, but there are a lot of startups trying to make personal flying devices. So there may yet come a point where there are quote unquote sky highways or something. Who knows? There are people trying to do it. I don't know if they're going to be successful, but they are trying to do it. So there was actually there was an article I had seen just about a month ago when Wall Street first realized the existential threat that China's far cheaper and much more efficient DeepSeek technology posed to the grand AI narrative, which almost single-handedly pushed stocks higher for most of the past 2 years. We speculated, so to speak, that Wall Street's forecast for Magnificent 7 capex may just be a tad excessive. Zero had just tweet at the time, there's so much grassroots excitement about AI in iOS 18.3, Apple is forcefully inducing everyone into its AI product since nobody will do so on their own. But yeah, $300 billion in capex. That's funny. Okay. And for a few hours, Wall Street did the same, sending tech names plunging in, Nvidia crashing the most on record, wiping out nearly $1 trillion in market cap in a single session. But it didn't last, and the very next day, Wall Street held a master class in mass delusion whereby the narrative of collapsing capex was promptly goal-seeked away with some 19th century deus machina called Jevons paradox, which simply states that if the price of a technology tumbles, its widespread adoption will more than make up for the sunk capital costs, or something along those lines. And while high-frequency trading algos had no idea what any of this means, the fact that momentum shifted from sell to buy was enough. And the ensuing 4 weeks, everything ripped straight up as if the entire embarrassing DeepSeek episode never happened and everyone forgot about it. That was until this weekend, because a report from TD Cowen strongly suggests the first knee-jerk reaction to the DeepSeek news may have been the correct one. It turns out that while everyone was patting themselves on the back for not reading too much into the DeepSeek shocker, the companies responsible for the very capex binge that is supposed to propel markets ever higher and justify the S&P's ludicrous 22x PE multiple were quietly cutting their losses because, in the immortal words of John Tolt, it sure is a hell of a lot easier to just be first to get out of a losing position. According to TD Cowen's Michael Elias, channel checks indicate that Microsoft has won canceled leases in the US totaling a couple hundred WMs, I don't know what that stands for, with at least 2 private data center operators, and has pulled back on its conversion of SQQs to leases, and 3 has reallocated a considerable portion of its international spend to the US. When coupled with our prior channel checks, it points to a potential oversupply position for Microsoft. And if Microsoft is first in canceling leases and generally blowing up the capex to the sky narrative, which on the market to the sky narrative is built, which it would have to be since it has the biggest projected capex hockey stick of all of its Magnificent 7 peers. And then they have the full note. Okay, so they're saying essentially that even while everybody is expecting there to be huge increases in stock market value because of AI, Microsoft is actually decreasing their data center spend. Robots won't be mounting doors in windows or plumbing. Maybe. I do think that you probably wouldn't be able to have robots produce houses like the houses that we have today. And I think that the big problem that you're going to run into is that there's all sorts of teeny tiny little variables that you just can't account for, that, there's just too much variability. You know, like these are tiny things that we normal people don't really think about. But like when I was building, when I'm building stuff with wood, you end up facing all the time. It's like the wood shifts and moves, and there's no way for you to really predict how it's going to shift and move. And then you just kind of have to deal with what happens afterwards and maybe fix, or, you know, and part of the art is how you account for those variabilities in the thing, right? And so how would robots be able to handle those? They might not be doing a very good job. And then, you know, the robots make a mistake, and, you know, who's on the hook for that mistake, right? So for robots to be building houses, it would probably have to be a house that is very much like set in stone, like very much mass produced, where there aren't really any tolerances. You know, like everything can be measured out to a tenth of a millimeter, sort of a thing. Because you can see, like, we can make a robot that can pick things up and take them to places. I'm sure that we can make a robot that can hammer in a nail. I'm sure that we can make a robot that can pick up sheetrock, right? But can you make a robot that, when it realizes that the sheetrock and the framing on the wall or the ceiling don't match up quite exactly, and how do I deal with that? That's where it kind of gets complicated, right? But the issue is that in computer programming, there are more issues and situations like that. It's basically like every line of code. I think that they're probably about on par. See, the issue with, okay, so like, I guess the thing that I'm trying to say is that the thing that protects like manual jobs compared to like programming jobs is not just that you have to have a robot that acts in the physical world, right? And so those issues that would make it difficult for the robot to do are issues that make it difficult for the robot to computer program. And it has to do with the inherent limitation of the LLM technology. All of the logic is based on the reinforcement learning that it's given. It's not actually thinking for itself. The bot trade is working. It's working really well today, isn't it? But it kind of contradicts our larger theory that, like, going into the rollover, that trades like that won't work as well. I'm really quite surprised how far this has gone. And it's getting to the take profit spot, right? Humans' ability to nearly infinitely adapt to situations with all sorts of variances. Yeah, well, and the thing that's really interesting about the way that the human brain works compared to like an LLM is that we can train ourselves, right? So like the way that they do these things, you need to realize that the way that OpenAI, so going back to this DeepSeek thing, okay? Let me explain again why the DeepSeek thing is such a big deal. The way that they made ChatGPT was they have an army of prompt engineers over at OpenAI that basically spend all day coming up with interesting questions to ask the AI, and then they ask the AI and they rate the responses. And they even have people going through and reading all of the questions that you've asked it and finding the ones that are particularly problematic, and then telling the AI which responses would be best. That's the reinforcement learning. So the way that they got to that place is through reinforcement learning, which it requires a significant amount of resources. Like there's people like sitting there and training the robot, essentially. You basically have an army of people sitting there and training the robot, right? But you didn't need that to get to where you are today, right? You just observed the world and adjusted your models based on what you saw in the world without any kind of outside instruction in many cases. So, like, that's a thing that the humans can do that the robot, that the LLM can't. And that's where I'm saying, like, it's not actually doing logic. And that's a key point to understand. Okay, so hold on. Shouldn't this have gotten out by now? Like, it got in at 7:30. Oh, no, wait. It will stay in it until 8:30. Why did I think... I don't know why I thought that. It'll be in it for another 30 minutes. Okay. Well, who knows? In 30 minutes, it could come all the way back. The take profit strategy is by far and away the weakest part of the robot, right? Yeah, right there at 23, it'd probably be a good exit. I tell you what, though, what a big change in cumulative delta, and the S&P 500 just falling apart. This really looks to me like it's another flight to safety move, and it's not super strong yet, but there is some steepening in the yield curve as well. At least between the 2 and 10. Oh, no, wait. On the knob. There is on the knob. Oh, wait. Why is this one... That's interesting. Shouldn't this be... ZF, or ZT, ZN? Okay, enter. What is the ratio that's supposed to be? It's like 4 to 1, I think. 2 to 10 is 2 to 1, but then it's double, so it is 4 And ZFZB 5-year to 30-year is 3 to 1. That one's correct as well. No, not 1 to 1, 4 to 1. Why did it do that? 4 to 1, there we go. I do have that right, yeah? That I should do 4 ZT and 1 ZN. It seems right to me. But now none of them are steepening. In a risk-off move, especially of this nature, I would expect to see steepening. So that doesn't completely match up. But that might just mean that, like, overall, the market is still not entirely sure what's going on. When I do my volume profile over here, yeah, spread C, and it's the 2 and 10, and it's 4 to 1. Okay, well, whatever. Well, let's recenter things. Now, going back to the earlier argument, that there's another part on top of that, which is, like, for me in particular, because what do? I'm the one that keeps the robots running and deals with things when they break, right? So then there's something about what I do that is even more unreplaceable, right? Maybe it could be at some point, if they actually did get better at coding, that a lot of the people would have to move from coding into what I do. But at this moment, I'm still deeply, deeply skeptical about the robots replacing all of the software developers. And I think that companies that are, like, making moves explicitly assuming that that's going to happen are probably going to regret it. Won't be the end of them or anything like that, but they'll probably have to play catch up at some point. FBI freaks out as Dan Bogino named deputy director. Doge Chainsaw is setting up yields for a soft patch? Well, that's probably good. I just went back to browsing Reddit. So one of the things is that Amazon there was like a fight between the creative directors of James Bond and like Amazon or something like that. And I guess that they just couldn't agree and Amazon took it over. So everybody's being like, oh, now they're going to make a woke James Bond. But this person thinks that the next James Bond will be the guy that played the Mandalorian. It was such a funny take. I could totally see it happening. Shave the mustache, give him the right hair. I think they could pull it off, maybe. I don't know, guys. This is actually starting to go a little bit beyond like what I would expect it to. The S&P 500 below 6,000. They break this iceberg on the offer. from r/day trading. I just read another post about brokers acting as market makers, and therefore when you win, they lose, and they cannot have that, blah-de-da. Well, yeah, if it's a Forex broker. It's interesting what some people think market makers are. Just as a recap before I tell you what I found surprising, when I actually researched market makers have a simple task to make trades possible when no one else is willing to take a trade. They provide a base level of liquidity to the market, and from their actions, they take a small profit. Okay. I mean, the whole issue is that the robots out there that are providing liquidity get turned off at the worst times, right? Okay. When it comes to U.S. exchanges, the market maker rules are highly regulated and well-driven. A market maker strategy is similar to one of a casino. They take a small cut here and there, and many pennies they earn amount to a nice return based on the massive amount of trades they partake in. Then, of course, someone will interject and try their hardest to make market makers the evil empire of trading by saying that they not only try, but for a fact do defraud each and every one of us our money by constantly manipulating the market to the market maker's benefit and detriment. Okay. Market maker absolutely does change its bids and offers based on current conditions in a way that works against you. But it's not necessarily like they see your specific position and all of that kind of nonsense, right? It's just kind of like on the average, the market works against you. If the market maker is forced to take the other side of the trade in an upward or downward trend, they lose a lot of money. It cannot be viable for them to guarantee to take all trades all the time, especially in a hard trending market where no rational actor would do so. Yeah, so what they do is they pull their offers. Well, this argument at its core is rational and correct, so let me tell you the surprising truth. The market maker is guaranteed by the exchange and the system, and in that case of such an unpreventable loss, they get reimbursed for it. Oh, really? So, yep, market makers following a tight regulatory rule book for playing by the rules, they get an out-of-debt free card every time they show up to play by the rules. So how does that make it? I don't know if that's true. That if they really suffer a catastrophic loss, that the exchange covers it. I don't think that that's true. But it's kind of funny hearing people finally realize that the reality of CFD brokers I learned 15 years ago. Well, yeah, but you just have to remember that almost everything that you're reading in the community is coming from people that have been doing it less than a year, right? Yeah. So sometime throughout a year of you doing it, you kind of realize that that's the way that Forex and contract for difference brokers work, yeah. Are there any comments in here? Yeah, let's correct this. %99 of their clients were long the Euro CHF? No. What? Really? How is FXCM still around then? I mean, I know that they got banned out of the US, but they're still around, aren't they? How did they survive that, if that's the case? I got something wrong here. They just branched off and started a new company. Oh, really? They took the US portion, sold their clients to gain, collapsed FXCM US into Global Brokerage Incorporated, and went to operate overseas with less regulate. Oh boy. I mean, there's a broader thing going on, though. Is that it does seem to me like the retail traders are kind of starting to figure out that the advantage that day traders were meant to take advantage of, that day trading was kind of invented for, was to make money from the spread. And with the robots and the market makers and the way that the system works now, it's pretty difficult to make money that way. And the industry is like perfectly okay with that. Okay, you just never get retail people day trading. I don't think that that's a good thing, but what are you gonna do about it? That's why the strategies that I'm trying to take advantage of rely more on being the informed trader, because I know that it's not really competitive for me to be the market maker. Maybe they should make a rule change so that smaller accounts have an advantage that makes it easier for them to be the market maker. Like if you're a small retail account, that your orders go to the front of the queue. And then we would have more diversity in our market making and probably more liquidity overall. That'd be cool, right? There's other things. So on Reddit yesterday, there was a guy that was posting. It was not the first time he had posted, but there was posting in NinjaTrader backtest results that looked really, really nice, like 80% win rate and a Sharpe ratio over 1. But it was only a month's worth of data. And he says that like that's just all he gets right now, which makes zero sense to me. Who is providing data through NinjaTrader that doesn't provide historical data? Like even if you're using maybe he's using a demo account. Maybe it's a demo account. Because even if you're using like the funded trader programs, even if you're using the funded trader programs, those give you at least a year's worth of data, if not 2. So I don't know what that's about. But anyways, so, I made a comment about that, and he says, oh, I don't have the data for it. And I'm like, give it to me, and I'll backtest it over 10 years. And people lost their minds. They all were very, very upset and offended that I suggested putting a strategy through a 10-year backtest. What, just like, especially, like, this was a strategy that, like, maybe took 1 trade a day. Right? So, like, yeah, to get something that's statistically significant, you probably need at least 5 years. Maybe I'll try making a TikTok about that. Probably tomorrow. Probably tomorrow when my wife's home. Today is a busy day. Wife is working, and I've got things I've got to do, and there's There's a story in on Reddit about Apple to invest $500 billion in the U.S. over the next 4 years. That actually is a lot. That actually is a lot. Oh boy, here's a thread on Reddit about Elon Musk wants to audit the Fed. Is that a good idea? Probably what they want to do probably won't be a good idea. Yep, there's already an audit of the Fed by the Office of OBM. What is that? Office of... I don't remember what that stands for. One done by two people who actually understand what they're looking at. So it's weird that everyone makes this assumption that nothing in the government gets audited. Most of it does and is publicly available. Anyone who was remotely interested in the idea before could have searched for such things. Yeah, but they want to edit and possibly change decisions. Is it the Office of Budget Management? No, that's the OMB. Maybe he said that wrong and he meant the OBM. Is AT&T doing well or poor? If it's doing well today, then that's extra curious. Maybe curious is the wrong word. Oh, it's going good today. It is going good today. Wow, wow, wow. Look at that. Wowzer. Is AT&T going up as a staple / utility and like a flight to safety kind of a play, or is there something else going on there? I think that there'd have to be something else going on there because I really don't see AT&T really being the best play for that sort of thing. Look at these other ones while we're at it. Oops. GS on a 3-day downturn, kind of coming down with the rest of the market. Yeah, no news for it on any platform. Yeah, but it could be like a multi-day rally off of earlier news, right? I don't know. Oh, what's this? I have a little message on TradingView. Cool, somebody liked my script. That's cool. That's cool. Oh, I didn't know that TradingView had messaging built into it. So you know what's kind of curious? We've kind of been tracking this for a little bit, right? Okay. So here's the chart. Buyers are in control. Once we get to the stop out line, very difficult for them to continue to move up. Very difficult for them to continue to move up after that. And basically, they cross the line at 21.5, 22. And where does the bump in the volume profile end up being? 22. In this case, I would have set my take profit at 21, one tick before that. Now, actually, I take that back. On that line, it seems like they usually go through it. I think on that line, they usually go through it. I've never seen them come short of that line. They want to go through it because, you know, that's where you get stops, supposedly. So, yeah. You would want to take your profit somewhere like one tick above it, and then you would want to take your profit somewhere above that. 22.5, probably the most reasonable one to though. But cumulative delta has flattened out. Hopefully it continues to stay in this kind of hole/range up here at 22.5, or when our algorithm exits after an hour, right? I feel that there's probably a lot of luck involved in this, right? Like, well, it would have worked on Friday if we had been using an hour like we're using today. But there's probably still some luck involved in it. But I don't know. Everybody else seems to just take one win and, you know, scream from the rooftops about it. It's probably a pretty good test case for the use of that indicator. Oh, you know what would be another LLM thing I should look into is how good or bad LLMs are at Rust. I've seen people talk about it and they say that it's bad, but I would like to see for myself how bad. That could just be because there's no reinforcement learning for it, right? We still got 30 minutes left in the stream, and about hopefully I don't know exactly the bar that it did it on. It looks like it was at 7:30. Kind of curious. Well, we'll see. I expect it to get out here in 3 minutes. We'll see how much it made. Oh, well, we can see how much it's made so far, right? It's made $187, $200 so far. Ooh, so at its peak, oh, not quite 250, not quite 250. It was, oh, I wish the average price was put in, oh, that's lame. It was put in ticks. So maybe there's a property somewhere we can change for that. Nope. I'm too lazy to find out what 0.53125 is. It's got to be 16.5, huh? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. Maybe. It's one contract, so whatever you... No, but it... Where did this go? Looks to be 170. I just don't want to pull the calculator out. Huh. 17... divided by 32 is 0.53125. You're right.
Order
it is 17.
filled.
It is 17. Oh, look, there it is. Exactly at 8:30. It gets out. And it gets out at that price. Oh, over here it tells it to me correctly. 17 and it got 23. Hey, that's perfect. That's perfect. I mean, yeah, well, but why does it decimalize on the accounts screen? It's annoying. But there are things to kind of see your position and everything aren't the greatest. Like over here on accounts or positions, like I want to know where I got in at. Doesn't tell you. What do you think Financial Juice uses to determine if they get a tick or a talk? Are you talking about the little sound that you hear? It just has to do with the size of the volume, and they're using filters that kind of like base it based on the recent activity. They have a whole platform that if you like to hear this stuff, they have a whole thing where so you can get that kind of stuff for like all of the individual stocks. I think if you were doing stocks in particular, it would probably be pretty useful, but whatever. Not my thing. So looking at your imbalances chart, I see 3 peaks on the order imbalance indicator. Why did it enter on the 3rd peak and not the previous 2? Okay, so it got in at this one right here. And this one happened before we turned it on. I don't know, with this one, hold on. Oh, no, it wouldn't. Okay, so it has to be over 60. That one was 58.83. This one was 59.13. And this one was 59.69. Ah, very, very interesting. Okay, so, but one of the things that happens is that this is showing you what the value was at the close, and it can pass the 60% mark before. So it had to have been that this peak was like as far as it got, whereas this peak it did go over it a little bit. Because if it was set up to only calculate on bar close, then it wouldn't have gotten in until this one over here at 8 o'clock, where you get 60.76. That's interesting, isn't it? But this one might have done it and would probably screw things up, except for that we didn't start it until 6:30. So it's things like that that make you wonder, though, doesn't it? That it's like, okay, what time I start the algorithm running makes a significant difference as to what trades it takes. But the stat that we're looking at is that if you take an order and you pick one at random and it's buy, and then an hour later you come back and you pick one at random, it's 0.5% greater chance that it will also be a buy. So there is a strong autocorrelation in the signs of orders. And so I'm just looking for a situation where there's buys and assuming that they'll continue to be buys. Then this time it worked. And Friday, it would have worked if we had used an hour instead of the 10 minutes that it was using. But it's not always going to work that way, right? Like, there are going to be some of these where, like, if it had gotten in on this one and then it waited an hour, it would have taken a loss on it. I just watched this video where it's like this guy, he has a shop and these guys, they're stealing from him, and all of a sudden the shop owner runs out the door and closes the door because it's like one of those big garage door gate things. He closes it and locks it, and the two thieves are stuck inside. That's a good one. That's a good one. I can show you that. Shop owner goes out and closes it behind them, and the two guys are like, whoa, wait, what? No. Oh crap. Oh crap, boy. Even they kind of, I don't know, they kind of look like they kind of maybe think it's a little funny that they got screwed over by that. Oh, man. Man, they're right back up there at the highs. You think that before we end today that they'll make another push? Well, they're chomping at the bit at 24.5. They could do it. There's been volume at 25 for a while, though. I don't think that 25 is just going to pull away. But it's been long enough that, like, there could be another leg. On the other hand, I think that probably the reason that we moved up like this was because of the S&P 500 declining. Do we really think that the S&P 500 is going to take another dive? I don't know. Let's see here. What's this? There's 25. Was I wrong? I was saying I don't think that volume at 25 is going to pull, but they did. They went right through it, didn't they?
Order filled.
Okay, that's triggering it in again. Wow. Yeah, wow is
Block
right.
by.
That's a really okay, that is panic right there. What is that about? That is, I mean, I don't think I've seen action like that since COVID. Like this most recent, let me come back here. Like if I come back to the price history of the S&P 500. Okay. Like we definitely didn't see that kind of action in here August? Nah. Maybe last year? I don't remember. But no, I think I'd have to go back to COVID to see a panic like that. Okay, there was August was pretty, there was a day that there was a pretty big jump, so. Oh yeah, so when was that? No, that wasn't, I don't remember what that one was. But going back to this is like 2023? I don't know. Maybe I'm just speaking out my butt. Sure was a strong impulse though, wasn't it? I was definitely like stop outs on that. All the treasuries are pushing their daily average 2 range. It's not extreme or anything. The flow seems to be though. Yeah, exactly. Well, and especially for a Monday in this context. But it was like we could see it from the very beginning, couldn't we? It was like something's off. I didn't anticipate a long flow to be coming in, so I didn't take a discretionary trade. But we could see that there was something off, that there was more activity out there than there should be. And so late in the day. Yeah, that's a good point too. I mean, if we're getting a large meta order, that could be executed all day. So that's not crazy unusual. And I do find that like most of the action is usually done before 9:30. So we're still kind of in that most active period of the market. But when you get like a move like that, it usually happens much earlier, right? I mean, that is something that really strongly suggests a news headline, and I'm just not seeing it. You know what's the interesting thing to me is that our algorithm got an entry signal and got in before that really, really big shift came in. So that is really fascinating. But we maybe just got lucky again. And I think that the issue with this one is going to be it holds it for an hour. Where is it going to be in an hour, right? Because that's the kind of thing that's going to have a tendency to pull back on you a little bit. So I wouldn't be surprised if it ends up losing a tick on that. But let's see what happens. Let's see what happens. Well, you won't be around, but I'll tell you tomorrow what happened. You know what? This is kind of what I wanted the algorithms to be like, though. It's like it's interesting just to watch it and see what it does, right? And it just needs to do something frequently enough.
Bulgaria to seek EU assessment on its readiness to adopt the euro.
Rio Tinto has backup plans if U.S. tariffs hit aluminum imports, CEO says. They're kind of lining up again. I tell you what, if they break it again, ooh. Honestly, though, I'm a little bit disappointed in this move because I'm not really seeing anything significant in the spreads. I double checked them all. I got my ratios correct and everything. But it's just not moving today for some reason. I would expect if it was a panic move that it would steepen. But that kind of brings me back to this whole thing that's like, well, we're definitely getting like risk off in the S&P 500, but like maybe it's not like, you know, panic as much as it is just like degrossing, taking profits, and you know, it's kind of an endogenous thing is, you know, probably great. But you know what? Like let's say that this turns into something bigger, that the S&P 500 is about to enter into a recession. It's starting from mostly endogenous market moves would kind of be like the best thing for economics, right? Because then people would start to think, oh, okay, maybe we can predict these shocks. Maybe we should use agent-based modeling.
Treasury yields extend decline, breaching last week's lows.
And Stuffa, how are you? I missed a lot of fun today, man. We got some interesting things happening in the markets today.
Politico says White House hosts tax discussions with Congress leaders.
Hey, Politico says that the White House is hosting a tax discussion with congressional leaders. It really does look like low-key panic. It does. Like, there's definitely something going on here. What kind of profit factor, Sharpe ratio, and Sortino ratio is good? Well, so Sharpe ratio, ideally you want it over 1. Like, in order to have a product that you can like really sell to people, like
saying
White House want it to be over
hosting
1.
Weekly tax discussions.
I don't know what that corresponds to Sortino ratio,
including Treasury Secretary Bessent.
Profit factor is a little bit different. I'm not going to say that there's like an ideal metric for profit factor.
Mike,
I mean, I suppose that like 1.5 would be ideal, but I don't think that actually real matters. What is interesting about profit factor is that profit factor kind of scales. So like if you have an algorithm and you're trying to find the best value for something, okay? Like what is the best period for this to trade on? Well, using a shorter period will probably make it take more trades. So depending on what kind of a strategy it is, that could be either really, really good for the strategy or really, really bad for the strategy. So if you were to try and maximize the net profit, then essentially it will end up maximizing towards either taking the most trades or taking the least trades. So max profit kind of ends up becoming a poor metric to optimize because of that. There can be some situations where it's okay, but other situations where it's not very good. But profit factor doesn't have that problem, because profit factor is divided by all of the number of trades, and so it's not something that will be higher or lower based on the number of trades that you take. So it ends up being a really, really good metric to try and use on your optimization runs. Sharp ratio can be a good one to include in your optimization runs, but that's another one that it will end up optimizing towards the strategies that take the least trades oftentimes. So I have to put a filter on it to be like, it has to take a certain minimum number of trades or it doesn't count. I have a custom Sharp ratio metric that basically says if it's not over this threshold of trades, then it doesn't count. Probably the best metric that I've heard of, and I've never used this myself, but there's something called a probabilistic Sharp ratio. So yeah. Like, Zien is not backing off of that high, man. It's only by a tick or two. It's only gone 2 more ticks, but that's still, I said if it goes another tick, that's going to be crazy. It did. It's crazy. This is a wild day in the treasuries, man. I do kind of have to wonder, because again, when we got to here, this is when I was saying I think treasuries are oversold. Kind of knocking on the door. So while I definitely see some hints of panic in the order flow that we're seeing here today, I'm not really seeing all of the things that I would expect to see if this was going to be like there's a recession coming or something like that. I'm just not completely getting it. Like, I'm not seeing a huge change in the spread, for instance. That's the biggest one for me, is I'm not seeing a huge change in the spread. So I don't know what that means. Could it mean that I'm right, that the treasuries are oversold, and that now we're going to get some momentum up, and that doesn't necessarily mean that there's going to be a recession or anything like that, but that some markets need to reprice? I don't know. It's curious. Now, I'll leave with you guys with one thing to think about. So I saw this post on Reddit the other day that I thought was interesting, not because they were correct or anything like that, but I actually saw like 4 or 5 different posts, all kind of insinuating the same general idea. And the idea that this guy had is essentially this, that there is too much money being parked in the stock market. That because there's so much money in the stock market, there's not enough money floating around in the actual economy. So I think that that's an incorrect look at things, because if you put money into the stock market, it's not really like that money just sits there in the stock market, right? Like, the person that was selling the stock takes that money and goes and does something else with it, and maybe they put it into the markets too. Eventually it's going to get to a place where like it's used for an initial offering. You buy from an initial offering, for instance, right? And then that's money that goes to the company, that the company used to grow its operations. So the more money that's in the market, the more money that's available to corporations to try and grow the economy. But you can look at what is the amount of money in the stock market compared to the M2 money supply as a ratio. And when that ratio gets you know, too high. There's too much money in the market relative to the money supply. That can suggest that the market is overvalued. That can suggest that the market is overvalued. And we're pretty high on those metrics right now. And it's suggesting that the market is pretty overvalued. So multiple people on Reddit on the left are kind of picking this up, though, and are kind of starting to go, like, it seems like the narrative shift that I might see is
Alibaba
trying to blame that there's too much money in the markets.
2022.
Which is a curious argument. Okay, guys, I got a bunch of things that I got to do today, so I will see you tomorrow. I will let you know if you're in Discord. I'll show you. If you're in the $3 Discord, I'll show you what it got when it exits. Okay. Otherwise, I'll tell you during the stream tomorrow. Stay excellent, team.